All right. A very good morning, everyone. I hope you guys are doing amazing. I hope you had an amazing weekend, and I hope you guys are ready for the markets this week. So, it's the first edition of our market snapshot in a brand new week. It's an amazing morning. I think gold just hit 5K today. We're going to go down and break that down as well. It's something that we did speak about last week for the guys that were in for last Monday's market snapshot. Yeah, and once again, we shall look at what the markets have to offer for us. And as I had mentioned last week, we do have a webinar that will be going on tomorrow, 8 to 9 p.m. And the theme is what smart traders are watching in 2026. And once again, I would like to let you guys know, just like we did last year, from the beginning, we're always speaking about what certain trends you need to look out for from the bulls on the indices to the possible crypto pullback down. Spoke about this at depth, usually with Robert as well. So tomorrow we are going to be doing exactly the same, and you do not want to miss out on that webinar. One beautiful thing about the Trump reign every single time, for guys that were in the markets in the periods of 2017 to 2020, it's that usually the moves are always expected, or they are not that hard to break down the macros. The macros are so straightforward that all you have to do is be patient and just wait for the right positioning, manage your risks, and then as well be able to take advantage of those opportunities. And as I mentioned last Monday, gold was on a crazy rally for 10 plus months, and all you had to do was be patient because the opportunities kept showing up. Yeah, so sign up for that webinar with a link in the description, and make sure you're tuned in because it's going to be epic. We're speaking about 40 plus years of market knowledge being shared in one place, and this time it's going to be epic. So tell a friend, tell a friend, tell a cousin, tell a family member, and tell all your in-laws to make sure they do not miss out on it. Once again, don't forget to sign up for the different classes that we do offer. We do have the physical classes in Uganda, Rumi Building, Lumumba Avenue, 7th floor. In Tanzania, Dar es Salaam, that's FNB House, third floor. Prudence will be there to take you through. We do have the 8 p.m. class for beginners, and we as well have the 11 a.m. class for intermediates or people looking for strategies and enhance, and of course the market snapshots. And just in case you'd like to attend both, from February we shall be having the advanced class at 10 a.m. to give room for some people to be able to attend, learn something, and then move ahead and come and look for some market opportunities. So that we can cater for all of you at the end of the day. Good morning, Odio Par. Hi, how are you doing? Good morning, Derry, and good morning, Robert Cavalli. I hope you guys are doing amazing. Yeah, okay, so let's get down and start looking at what we have today. So I'm going to start with our calendars and we see what news events we need to be looking out for. So of course, gold, forecast gold was towards 5,000. Eyes 4,500, 6,000. That was quick. I think last Monday I was here and I told you guys that my target was to end last week with gold at 5,000. Of course, we didn't quite get to 5,000, but we were very close. Or I think at 4,990 something when we closed. Let me just confirm that, because I do remember that clearly. We spoke about that deeply. We closed in at about 4,989. And as of the morning, by about 1:45 a.m., gold had soared above 5,000, which is amazing. So hopefully last week you guys were looking for buying opportunities on gold as you had anticipated. And yeah, that's the major headline. And the market opened. The gap up was very, very crazy. So we look at the Monday. What news events do we have? The only orange folder events. We have the German info business climate. Not really high impact. Don't expect much to move in the market. Core durable goods orders. That's month on month for the US economy coming in at 2:30 p.m. Also won't be a major market mover. So tomorrow we have a speech from Trump, just like we did last week on Wednesday. And once again, I told you last week that based on what Trump says, the market will react to that. So he's going ahead with whole idea of pursuing Greenland. He's not backing down. Though at the when he was in Davos, he didn't really speak much about the tariffs on the European nations or about imposing the tariffs. But what he spoke about was how tariffs had actually positively impacted the US economy. And he even spoke about how it helped some of those nations to grow their indexes from 2 to 3 through those tariffs he put in, which wasn't a direct way of saying that he can consider putting tariffs if they don't put him on a negotiating table to get Greenland. But basically, it means that tariffs are not ruled out. That's why we later on saw that after that small pullback on gold, it later on pushed all the way to the upside. So due to speak about the economy, the year, which is now going to be very amazing, this will give us a much clearer picture of where we expect the rest of the week to end, right? So there should be some kind of what you call forward guidance. It comes back to reinstate confidence in the investors so that they get to know that the economy is doing great and they can keep investing in American bonds. So that's Tuesday. Wednesday, there will be CPI, odd CPI. Of course, we will have Robert take you through that. Tomorrow as well, Rufus will shed more light on President Trump's speech and give you more details of that. So as far as today, European stocks are set for lower open. European equity markets were poised open lower on Monday as risk aversion spread across global markets amid heightened geopolitical tension, right? So oil rises amid geopolitical risks. Of course, WTI crude futures rose above 61 per barrel on Monday, extending Friday's gains to more than 2%. So our dollar weakens to fourth month low, and this is around still the same geopolitical tension and the fact that there's a possibility of Trump reinstating tariffs. And you know how this hurt the dollar last year. We saw it hitting a 3-year low, and right now we are now pushing back to that once we started seeing this kind of Trump's kind of sounding like he wants to bring back tariffs once again. All right. Good morning, Robert Cavalli. Good morning to you. Happy trading week, Musk. Night. Good morning, Jamada Yahya. Okay. Good morning to you. I hope you guys are doing amazing. So don't forget that all through the session, if you have certain pairs you really want us to look at, you can go ahead and put them down in the comment section. I'll go ahead and give you my insights and my oversight on those currency pairs, and you can have some analysis on them, top-down analysis, of course, and then we can move on and see how the week plays out. If you have a community, don't forget you can share the stream with them as well, and then you can share ideas once again, and don't forget to do your due diligence at the end of the day and manage risks. Yeah. So now we can go on to technical sides and look at what the market has to offer today, or look at what the technical charts are giving us. So let me share my MT5 screen in a bit. Also, once again, don't forget to take advantage of the ongoing Caribou bonus with FXPesa. Basically, you're getting a 100% deposit bonus on your first deposit. Deposit when you create your FXPesa account, and you can go ahead and create that with a link in the description as well. The link to the webinar as well is in the description. You'll find it there, and yeah, you can share it with as many people as you feel like, or as many people as you like to definitely win with at the end of the day. So that's basically what you can do as well. Don't forget to follow us on all our social media platforms. Yeah, for more education, content, and reaching out to you guys. All right, so your mother says you're USD team. Euro USD. Okay, yeah, we'll look at that. How are you? Can you look at USD JPY? Yes, I will. Look at that, Sami. Good morning to you. I hope you had an amazing weekend, Sami. All right, so okay, this is Euro USD. So I think we should start with Euro USD. This was analysis from last week, and of course, this was moving into some news events that we had going on that day there. We saw a bit of some volatility that gave us some bit of how do I call it? Some bit of fake outs within this, because gold was USD was going to do one of two things: either break above and push to the upside, or come back and fill this imbalance. But this basically happened during the middle of the week because of people are leading up toward the events leading up towards Trump's speech, right? But as you know that just like last year, when Trump began speaking about tariffs, we saw this currency pair go on a very, very crazy rally, pushed all the way to the upside to very high levels, and this is the same thing that's happening even now. We can see it doing exactly that. So in that case perspective, I'm going to first get rid of that, then we can have a fresh analysis on this. So coming in on, when you look at the 4-hour time frame, so we are still bullish on this because of basically what is going on with the geopolitical tension around the world, even with the American economy. So far, we had some news last week. It wasn't looking so good for the American economy. So this is exactly what you would expect to happen. So right now we have a very nice imbalance coming in between here, and we'd look to see if we can get to price it in. Of course, there was a gap up here. Gap ups are not the best places I love to take my trades from, so I don't really love taking a trade from a gap up. But what I like doing is taking a trade after a gap up has been filled. That's something that I feel is how would I say, gives me more confidence. I don't just take a trade because there was a gap up. Sometimes price just fills them and goes through them. So if prices respect the current gap up that we had from today's market open, then I'd want to see it break above this resistance that was formed here. So you can just want to see how significant this resistance is, but then you can look at that. If I zoom this in quite a bit, you can see the number of times this on a 30-minute time frame. You realize we had this first point here that you could easily see on a line chart. There's some point around there with this gap up candle comes here, tries to reject the level, breaks above, breaks below, retests above, fake out, retest, pushes down into the gap up, right? So if the gap up is to actually hold price through today's price action, through today's market, I would like to see a breakout of this area, a pullback. I don't really go with a retest. I don't call it a retest, always a pullback, right? Because when price pulls back, it can pull back anywhere in between the breakout area and this whole area of liquidity zone, as I call it. So that's why I always say a pullback, not necessarily a retest to the new support form. Sometimes it won't respect the support levels. So when I have it like this, if price comes in, I get my 5-minute confirmation, I'm able to take the trade. If it doesn't, I let it be, right? So that's the first thing we'd like to see it do. So when I go back to my 4-hour time frame, I'm looking at models. If price happens to just fill and go through this gap up, what will be my next buying zone, right? Because I like having 3 trade ideas. Then whichever of those happens to give me a confirmation, it's what I'll go with, right? So when I look at this and I come to 30-minute time frame, you're going to notice something very peculiar there. We have this demand level here, right? We have this demand level right before the breakout on a 4-hour time frame. So that means if price happens to go above that area there, then it fails to break above from here, or it fills through this gap up to come all the way to this area here before it continues buying. So I'm not going to be looking for bearish opportunity in any one case scenario in this. I have no business looking for bears. Like, this should be a lesson that definitely many of us learned coming in from last year's market. You don't fight the trend, right? You don't fight that. It's going to be your best friend. You want to play that trend. You just ask yourself, for pairs like Euro USD, JP USD, Gold, JP JPY, that had a very defined trend last year, right? Imagine all you did was look for buying opportunities throughout the year, right? You had 10 months of these pairs buying. Gold, for I think 9 months in a row, it never had more than 2 days that were bearish. It didn't for more than 9 months. Now ask yourself, what if all you did was look for buying opportunities? How many would you have gotten, right? So it's a low probability of ratios at the end of the day. So that means you'd have more or better trading days than you'd have looking for sales, right? I don't buy into IS. Okay, I would go to that side, but that's basically what you do. So with your USD, I'm basically going to be looking out entirely for these buying opportunities. Nothing more, nothing less. I'll be looking for buying opportunities until the structure happens to shift bearish. And for it to shift bearish, when you look at the daily time frame, we have a nice trend line being respected. You see this? And then what price actually did, it gave you a very nice channel. It gave you a very nice channel here. You see this channel here? It gives you a very nice channel that gives you a correctional price action. This is correctional price action. You see how nice and how beautiful this look like. It's almost textbook. It's almost like a textbook example. You see that? It's a whole nice correction move that price used all the way to this trend line, gave you your third touch, gave you this push out, then gave you this breakout. So within all these areas, I'll be looking for bullish opportunities. The other area where I may take some small intraday would be if price now comes and takes out this low here, because then I know price will want to come to this lowest area to retest this trend line here. Besides that, I wouldn't want to look at anything else. So for guys that do, let's say, Falcon trading, this is a very amazing setup for you guys. You can just have something of this nature here, and then you can see what price doing: higher high, higher low, higher high. Expect it to push down, give you a higher low, continue to the upside. That's something you can tend to look out for on Euro USD, as requested for by Jamada Yahaya. So that's your USD for your USD for you. So I'll be looking at those particular zones I've marked out to try and see if I can pick up some buying opportunities, these two zones particularly as well. Then of course, after price breaks above that resistance, I can also start factoring in the possibility of buying opportunities, right? Okay, so let's move on. Hello, how are you? Can you look at USD JPY or USD JPY? That's Sami Jathi. So let's move on to USD JPY and see what the markets are looking like today. Oh wow, so this was a tricky one. So price had respected our zones for quite some time here. We had this breakout from last week we were looking for. We had a very small retest. Then if you look carefully at the push to the upside, price did try to push above this area here, but you can see that it didn't go so far. It kept filled up this imbalance here and then started pricing in lower. And I think we're having the same similar thing on our GBP JPY. So we saw that bearish momentum coming in and breaking this trend line. So it's a daily time frame, and having seen price break this trend line, this momentum is really, really so much. And as we know that the dollar is actually not looking healthy right now, as I can say, the dollar is not looking healthy, right? So if it's not looking healthy, that means USD JPY is definitely going to push to the downside, right? It's going to be bearish. So if we're looking at a bearish USD JPY, that means we're going to focus more on the momentum. But just for context, I want to look at the higher time frames for one or two reasons. So what we call major levels, and I'm going to just mark this. Let me first get rid of the first drawings we had. Let's first get rid of this first drawings we had over here. So there's some major levels that I like using. So you can look at some monthly time frames. I'm going to just put a line there, come down to the weekly, and I'll realize on the weekly time frame I have a demand level, right? So yes, there is bearish momentum, but you have to pay attention also to that demand level that you actually are having on the weekly time frame, because the weekly time frame is a high time frame. So that means as an intraday trader or a day trader, the kind of bullish opportunities that may show up within that weekly demand level may actually be a good number of pips, right? There may be a good number of pips that you could actually be able to capitalize on through the day's trading activities. So when I do this, I'm going to now start breaking down time frame by time frame to try and get the best possible area where I can definitely try to position myself, or wait for the market to get to definitely give me a good buying opportunity. So when I look at this area here, price had given us a first retest, meaning that it had tried to consume this area. So if price had tried to consume this area, the next best area I can tend to have will have to be below this area. So as long as price is within this area, I'll be inside this area, just in the box area, right? I'll look at the bulls. But before price gets to this, I'll see the momentum getting me into this area here. I hope you're getting the idea. This box area is the area I'm looking to buy from. Any area above it, I'll be looking to sell because it's a daily time frame. So then I'll now break down to my intraday time frames for guys looking for daily opportunities. So you can see that price is almost showing no intentions of going back up to fill this gap down, right? It's showing no intentions because the bears are really, really trying to pick up. But now we don't have enough price action here to give us what exactly is going on. So we're going to go down to a 30-minute time frame and try to build up on a 30-minute time frame. So I have this box down here, as you can see, that I've drawn. I can be able to refine it as well. So if I come around and refine this level here, okay, here it is. I'm looking for a fresh demand level, or what I would call an unmitigated demand level within that whole zone, right? Remember, it was a daily zone. We refined on a daily zone. It was a weekly and refined to a daily zone. When I come to this, I realize the demand level here price came with this week, took it out. It's no longer fresh. Then I'll be left with this last demand level, which means that this is what I would call my refined demand level, where I would like to take my best opportunities from. So what I'm going to do is I'm going to come now to the current price action. Now I'm saying if we are looking at bearish momentum, where are we targeting? We're targeting this demand level here that we have refined on a 30-minute time frame. When I look at this, I can now see a bit more structure, right? Where the gap down, price from the higher low, from the lower high, a lower high, then a lower low, right? Came back from the lower high, then a lower low. But one thing I'm going to notice here now, in terms of analysis, is that at this level here, price is having difficulty to break below it, right? It's having difficulty to break below it. And if I go a step further and look at the whole of that zone, I'm going to realize I have some bit of a consolidation. So I'm going to just mark it out from this breakout area like this, because this is the same hole. So the support level, price broke below it, trying to be a resistance. So what am I going to look for through the day? I'm going to refine this slightly to a 15-minute time frame for USD JPY. Then on this time frame, the 15 minutes, okay, it's just this on this time frame particularly. Now here I'm going to look for one of two things. When price breaks above this area, I don't want to really be so solid on the buys. I don't want to take good. I don't want to really stick to buys at this point yet. But then if I get a confirmation within this, since a 15-minute time frame, we can look at a 3-minute time frame confirmation. We can try to see if price can come and fill in this gap. This is something that's highly risky because the momentum is bearish. As I said, when we are bearish, we have no business looking for bullish opportunities. But of course, as intraday traders, sometimes you want to check in for kidogo here and there. But then, of course, if price breaks below this, I'll look for bearish opportunities that will push me to this demand level that we're referring to. Now, this is what I'll be looking out for on a USD JPY. So that's my perspective on USD JPY. That's for you, Sami Jathi, and USD JPY as well. So we can move on to the next pair. Let's look at what Lina Muhonja. Good morning to you. She says US oil. It's from the article we just read. We saw that US oils has added 2% to its Friday gains, going above the 60 mark. Now this is US oil on a daily time frame. On a daily time frame, this is US oil rate, and of course, straight away, the first thing you're always going to notice is this bit of price action. If you can look at this carefully, this bit of price action. Let me mark it that way, like that, right? You can see it's kind of like a price channel. By the end of the day, when you speak about pure price action or market structure, we are seeing a high, a low, a higher high, and then possibly price has formed a higher low. So just from the basis of market structure, if price gives you higher highs, higher lows, higher highs, and then price giving you a higher low, the next thing you expect is a new higher low, right? Higher high, sorry. It's a new higher high. And for a new higher high means price will have to target this particular area. So of course, the whole goal is for oil prices to go down, but depends also on the geopolitical tension. It becomes very, very important to know the drivers, right? Now, of course, oil is a commodity, a very important commodity, and its price can always appreciate based on demand and supply. For example, if OPEC wakes up and increases like 200 million barrels of oil per day in production, the price will go lower because then supply increases, right? Supply increases. And of course, if they reduce how much they're producing of oil per day, or you go back to like the Biden times, Joe Biden, where he claimed that he's going after climate change, and then they were turning down drilling in the US, especially in the southern states of the US. We saw oil moving to almost record highs, and the price of oil in the US going to almost $5 per liter, actually. But now we are seeing that due to the current geopolitical tension we are having, we are seeing this pushing to the upside. Of course, if Trump wakes up and starts putting tariffs on some of those 8 major nations, this is going to be one of those industries that will be hit hard, the oil and gas industry. And that's why we are seeing it reacting this way, especially coming in from last week's economic events, of course, at the World Economic Forum in Switzerland. When you come down the 4 time frame, so I'm just showing you this, we expect to go to a higher high, right? And what are you seeing? It's happening right now as we speak. Price came, we have this small breakout here. You can see it on a line chart. When you come and do this, you see price gives us a high, low, breakout, right? Then on the candlestick charts, you get to see that there's a retest that's currently happening. So that means price would expect it to give you a retest, then probably continue pushing to the upside. Coming down to a 4 time frame, what do we see? What are our best buying zones? So because you can't buy in the whole zone, this is a very big zone, right? So I can see that price came up and had a rejection around the supply level, which of course is something I want to start fighting from. So I'm going to look at areas of interest that are below this imbalance, right? One thing I like doing in most cases is I'll come and look for an area, at least 50% of this breakout. So if I come and put in a fib, okay, my fib is a very bad color. Let me first change the color on my fib. Okay, properties. Let's have this. Oh, it's a daily rectangle. want to change the color on the fib. Okay, the fib shows red. That's not even. All the levels are showing yellow. Let's put them to red. Make them a bit thicker. Okay, so now these are the fib levels. I hope you guys are able to see them. So as you can see now, this is the breakout zone, right? Someone just adjust this. Okay, so I'm just adjust this slightly to the breakout. That's the breakout, right? So one thing I would love to do is to look for opportunities below the 50%, right? Now this is our 50% level. As you can see, I've drawn my brown box exactly at the 50%, almost perfectly. So that's exactly where I would like to look for best buying opportunities, and you pay attention to the what? So along with best buying opportunities, if price doesn't get to that, let's just refine a bit to the 30-minute time frame. I don't really fancy trading imbalances unless they have certain conditions. When I look at this best area of mine, what zones do I come up with? I have a zone right around here. So this will be what I call my extreme demand level, or the last level I would like to look for buying opportunities. But then when I come around here, remember we had an imbalance. This is when I trade imbalances. Inside this imbalance, I have a series of demand levels. So what I want to see is this demand level giving me a confirmation on a 5-minute time frame. If it doesn't, I'll rule it out and wait for my extreme other level. So these are the two zones below that I will want to look out for to take buying opportunities. When the market gets to that, let me look at something here. If I draw around here, do I have enough rejections on this before I break out? I do have a couple of rejections on this, so I'll actually consider that area there as my strong low. Other than this, this is something called liquidity conveying, and sometimes price can convey certain areas and to give you a certain kind of structure. So when I look at this, I realize this was a strong level here. When you even draw it back to the left hand side, you can see a number of reactions that happen around it, right? Just before this breakout. And then the structure below it becomes my ideal area of interest, the structure like right below this, like this. So I'll mark it that way there. So you can see price is pushing down into this 4-hour imbalance. So of course a 4-hour imbalance, when you go to the 4-hour time frame, you see this. That's why it's also an area I love watching, because up people would say an imbalance, then when you refine it, you find a demand level. Price only moves in supply and demand. So even these imbalance and inefficiencies, whenever you do the right refinements, you always tend to find those imbalances there. I'm not going to have a breakout perspective on this pair because of very many reasons. The only breakout perspective I can have will be to the downside, because we all know that the general goal for US oil is to reduce its prices. So of course, for me to now start looking for bearish opportunities, I'll need to see price break out of that kind of triangle pattern that is forming, and then I can start looking for bearish opportunities. Besides that, I'll be looking at bulls within those two areas, especially for today's intraday price action and opportunities as well. So that's exactly what I will be looking at. So that's as far as US oil is concerned, and that's as requested for by Lena Mohonja. Thanks a lot for a request. King Z official NA says, can you check BTC next? All right, let's look at Bitcoin. I think last year has been one of the trickiest years for Bitcoin traders. From being one of the best, of course, we saw almost 120,000 US dollars per Bitcoin. And then we still saw one of the biggest liquidations in history that also led to the demise of some of the world's most popular crypto traders, of course, the Ukrainian. Okay, so let's look at the structure here we're having on Bitcoin. Bitcoin, I'm going to have to get a whole to the analysis. So allow me start from a way higher time frame, which is going to be the monthly, so that I can have the best possible perspective. So the general perspective on Bitcoin, if we come from way back, was surprised to come in and do it and give us a nice rebalancing of this area, right? When you look at this breakout area, price didn't do this the first time, and the second time it's attempting to come back into this area. So my long-term perspective ideology, first and foremost, will be to see if we can push all the way into this zone. See the zone here, all the way to about this zone here. That's the long-term perspective we are seeing. So you can see the past few months. This is 1, 2, 3. The other 3 months before Jan were very bearish. And the thing with Jan is that Jan began with a lot of bullish momentum, tried to fill into this imbalance. One thing I'll tell you about imbalances, as I mentioned in the previous analysis, for them to work, you'll always find a demand level inside them. This is something that you guys can just test and let me know. Of course, not all of them, but the best ones are the ones with a supply level, like for example, here somewhere in between. So price comes in, fills up the imbalance or the inefficiency, and you're seeing the bears are picking up, and it's guess what? Just 4 days to end of the month. So basically, it began bullish for almost half the month, and now it's standing bearish, showing you the kind of momentum we're having from there. When we come down to the weekly, you can still see a similar perspective. Price was trying to push in for a couple of weeks around this area still. The imbalance now starts reducing, right? Now reduces to this area here, where we now saw price after perfectly rebalancing it on a weekly time frame. Last week it flipped bearish. This week started bearish, though it's trying to get some rejections, and it's just Monday. So it's just basically still a room for price to go lower. But what this shows us now, because now we're breaking down, right, lower time frames, is that somewhere here there should be some kind of strong support level, right? Somewhere around here there's some kind of strong support level that is trying to give us this rejection of this weekly perspective. Let's go down to the daily and see now. On the daily time frame, what are you going to notice? So now I want you to cut this across this, right? So look at this. You see this kind of rejections that are happening here. It's not by coincidence. You can see the reactions that the market has been giving you around that price level. You see this? Even if you take it back to the far left, see the rejections here, the rejection, break above, price comes, a fake out, rejection, fake out, price has come back and tapped into that area there. So that's a very nice support level that you can use, right? So that means for us to go full scale bearish, we would really love to see price go below that particular area. So once again, this inefficiency reduces, and now it comes to one of the zones I love to start like trying to trade. Okay, let's see this. The inefficiency once again reduces up to there, right? Price balances it fully, it reduces from there. So what do we see? We have a support level, we have a kind of a resistance or supply level or an imbalance that held price from up over there. So what we are seeing is right now there are two bearish areas because the momentum is bearish. So you want to basically look at bearish opportunities within this. So when I come over here, I have a supply level right above here with a nice imbalance in it. It's a level that I would like price to get back to, but this is a daily time frame, so it's a high time frame. I won't want to, that will take a number of days for price to get there. Then I now have this nearest demand zone, sorry, it's a daily supply level. So when I go down to the 4-hour time frame, we're now trying to refine, we're now looking for the best ideal levels to look for. So of course there can only be very many levels above where you can possibly look for selling opportunities, but you take one at a time, right? One at a time, no pressure. Wait for confirmation. If it offers you one, you go with it. If it doesn't, well and good, right? So we have this most recent 4-hour level that is here, right? And you can see that price had a bit of hardship going right below some levels here until it broke out with this high momentum, and now we are seeing this correction move. When I go down a 30-minute time frame, I want to look at the nature of the retracement. I want to see how aggressively price is giving me a pullback. So when I come to this, I can see some kind of almost correctional move, and I want to pay more attention to the kind of momentum price is using. Now, on a 30-minute time frame, I'm going to have a small support level here, and you can see this nicely, right? You can actually even elongate it to the far left just to clarify that it's a strong level. So you see this. So as far as today's intraday opportunities are concerned, I want to look at price going below this support. Then I can look for bears targeting this level, and probably I can hold it beyond that to continue the bears. Because if you've looked at the weekly and the monthly time frame, the key areas are way below in the 70s, right? So that's something you'd want to look out for. So this is what I'm going to look out for as far as this is concerned. So this area above is also a selling area. So there are two selling areas. So either price gets in here, gives me a nice bearish confirmations, of course on a 5-minute time frame for confirmations intraday, or I'll have a breakout and then a nice correction move to push me lower, right? To push me lower to this side. That's exactly what I'll be looking out for as far as Bitcoin is concerned, or BTC USD. So that's my perspective on that. That's my perspective intraday on BTC USD. So of course, if price breaks above our next zone, we'll be up over here. This is all just more of a liquidity build up or an accumulation phase. So sometimes price can accumulate sideways. That's something you need to learn to deplicit. Sometimes price can accumulate sideways, just come and use it as a liquidity, right? So this is the sideways accumulation we're having. So that's basically it. So then price distributed lower, right? So I am having these areas as key levels because all this time price is picking up liquidity to now get that bearish, all those bears in control. Okay, so this is what I'm having from there. So let's move on. That was from King Z official. That's for BTC Amal. Wajid, nice, thank you. Gold. Okay, now gold. Let's look for gold. So here we go. So this was our analysis from last week. As I said, we expected that buy up came in nicely, beautifully. And yeah, we are way above 5,000. For the guys that see my status on WhatsApp, I think at 1 a.m., because I took some trades up to 3 a.m. I was trading the pre-Asian. I said, can we make it to 5,100? And of course, we went right above, slightly right above 5,100, but I'm still taking it out, right? So above 5,100 also our next target level. If we're remaining bullish, 550 is our next level. At this point, in case when I'm trading a new all-time highs, I trade with what we call psychological levels. So psychological levels, look at 550, 5,100, 5,200, and then on top of the psychological levels, I then now supplement price action. I'm seeing what's happening around that area. So this is how I typically trade. Gold, I went usually creating new all-time highs. That's a question I've received for very many times. Tomorrow I'll have a bigger breakdown on how I do this and how I tend to supplement that kind of analysis. But it's something that is amazing when you learn it simple terms, or how to use the psychological levels and how to trade above all-time highs. Because someone will ask me why I'm still holding gold, but I'm just trading psychological levels and how price is behaving. So I won't just do the 1 hour time frame because from the higher time frame it's just bullish. That's all that is there, nothing else. It's just bullish, right? So we look at this. I would want to see this candlestick that's closing in the next 20 minutes close above this area. This one rejected above the 100, I believe, the 5,100. Rejected around the 5,100 because psychological level, of course, rejected the 5,100, came below it all the way almost to the 550. So you can see all that almost to the 550, but then it respected above this because there was a demand level on a 15-minute time frame around the 550. Where the demand level at this 550 here, right? Where the demand level around the psychological level, and price pushed to the upside at the 5,100, rejected. Now we are pushing up, right? Since price already tested the 5,100, what do we expect price doing? Because above that, we would want to see it come break above and then push all the way to the 5,150, right? To the 5,150. That's going to be my next target area through today if we remain bullish. So what I'm looking out for, because price isn't closed above this, I'm going to just go there to the 15-minute time frame and try to see how liquidity is trying to build up, because we're just 41 minutes into the London session. We're 41 minutes into the London session, and want to see how this price action. Remember, the 1 hour hasn't closed above this high, and we would need the 1 hour to close above that high to confirm the bullishness through the rest of the day. But besides that, if you watch carefully, price has actually mitigated all these demand levels here. You see this? They have all been mitigated. That means if price pushes lower, I wouldn't fancy taking a buy around this. No, I wouldn't fancy that. But I'm going to look for the key levels below, all levels below that are actually not fully mitigated or not well mitigated. So what do I notice with this? I have this that price had retested, right? Price had a retest on that area there, pushed up, right? Then right below is where there's a gap up. So what will I look for? I'll actually look at the area below the gap up, because that area price had a partial retest on it. And if price breaks this low, the momentum will have to be so crazy. So that means that price would actually use this area more importantly, or will come back all the way to this area. But that's only if price comes and closes below this low here. If price then closes below that low there, then we are still pretty much not looking for a push to the downside. But in the New York, we can tend to see some kind of correction move, most likely, before we continue the bullish. I expect gold to close bullish. Though I expect some kind of corrections in the pre-New York. East African time, we're talking about 3:30 p.m. around that time there. before 4 p.m. when the New York session actually opens. So that's what I'll be looking out for in this perspective. So right now we are not seeing it push it to the upside, trying to correct to the downside. When I look at the 5-minute time frame, what levels are still here that you can actually use to go up? I'll have only one demand level. Now the fact that I'm using a demand level on a 5-minute time frame, this means you'll have to take a 1-minute confirmation, right? If you're going to take a buy within this, you want to take a 1-minute confirmation. When you examine this area, realize most of the areas in it have been mitigated except this area here that price respected initially, but these have been mitigated. That means if price goes way below this, this will be our next area of interest where we'd want to take our buying opportunities from or look for buying opportunities within. That's basically what you'd want to look out for when it comes to this particular pair or gold, I must say. But on top of that, if we see this 1 hour candle close above this area here, we could just say even a break above this area because we are seeing a nice resistance forming above it. We could see a nice resistance forming right above this area here. So a nice candlestick closure above that would mean we are still pushing to the upside and looking for the 5150 as the next target level that shall be seen, right? So right now we have a demand level still around the 590s, around the 5100, still rejecting it, but a break above that would still look for those bulls to push us to the upside. So Ken Bull Markets Official says SP500. Let's look at SP500, right? The S&P 500. The S&P is one of the most amazing indexes. And for guys who trade stocks, invest in stocks, I think you know that over time it's the most consistent stock to invest in. It's the most consistent stock to invest in over time. The returns are slow but gradual, but over time they add up a lot. And Kevin O'Leary has been very, very vocal about investing in the S&P 500. Okay. So we look at this. Okay. So S&P 500, we are looking at because we're going to be a bit bullish on this. I mean, we're tracking the 500 biggest companies in the US. So the last thing you want to do in 2026 is to be bearish on these indices. Yeah, all American companies. Why? We have World Cup this year. Why? Another reason is that because we're having very major investments in the US from the deals Trump signed through his tariffs last year. A lot of the investment is going to start pouring in this year, the construction and all that stuff for the poor, building up data centers, and is still receiving more deals. And another thing is that, of course, he puts tariffs in place. He'll be looking for trade deals. Just a second. Sorry about that. So you'll be looking for some of those major deal investments that will always push these pairs high, right? Just like so Nasdaq, we saw the SPX last year. Look at this whole push to the upside. That's what will keep happening, right? So let's look at the bulls. Okay, we look at the bulls. The gap, we had a gap down some time back. Price tried to respect a little bit, but you can see that it pushed down and then still picked up more bullish momentum. So what I'm looking at is for price to break above this level here. We can see that there is a nice level. I want to just watch at these levels and how significant they become, right? See that? We have a nice resistance. So around that resistance level, I would want to look for bullish opportunities above that. But if price happens to go bearish, we are going to see what would need to happen for price to go bearish. But if price to go bearish, my next bullish area, because I'm looking for bulls, right? But of course, in trading traders, sometimes you can, look for those kidoggos here and there, some 20, 30 pips. But I don't really fancy that. I fancy trading the trend. It's always interesting. It's always amazing. It's always stress-free. And it gives a lot of peace of mind. So when you come and look at the lower time frame, here's where we now pick up and see if price was to go bearish, what would have to happen for price to go bearish, right? So on the 30-minute time frame, you realize that our price gave us a break out to the downside with another gap down, right? And as I was mentioning earlier on, this gap down, sometimes price will just come and fill them up. It will just come and fill them up. So what happens with this? Price fills it up. So what I'm going to be looking out for in this pair particularly is when I go to my 5-minute time frame, I want price to give me this kind of structure. So this is the pattern I will want to see price give me, as long as it's within this area here, because you can start all of these areas have been consumed, or they have been consuming themselves. Actually, the 5-minute won't do me justice. I'll go with a 30-minute time frame, since it's just the New York session, London session, sorry, that we are in. I'd want to see a break below our area and then a retracement. Then I can look for bearish opportunities as long as price is within these zones here. So I'm going to take the current low, for example, like this, right? I want to price break below this low here, correction, push to the downside. If I don't see any kind of pattern like that, I'm definitely looking for my breakout, my correction move, and then definitely ultimately shoot to the moon. So I'll be looking for in that case scenario as far as the S&P 500 is concerned. All right, so GBP JPY, so that's S&P 500. That's for UK bull markets official. Let's look at GBP JPY. All right, so JPY pairs, I say they picked up that kind of bearish momentum towards the close of last week, and we're seeing it today as well. And you don't necessarily fight the momentum, right? You don't necessarily need to fight the momentum. So let's have a top-down analysis on this and just see where we want to position ourselves, right? So unlike USD JPY, you can see GBP JPY has broken below a certain resistance level, right? We haven't necessarily closed below it yet, but we have broken below this resistance level. What I'm going to pay attention to personally is going to be this imbalance. I'll pay much attention to this imbalance if there's a demand level in between. But in the meantime, I'm going to be focusing on seeing this bearish momentum these 2 days. What structures are they forming when they are pushing us to the downside, right? What structures are being formed? So let's see this. Okay, so this imbalance so far, nothing in it. But this on a 4-hour time frame now, the price is reacting. Remember, when this push to the downside here, we don't really have any price action on a 4-hour time frame. We can just see breakouts to the downside. So we're going to break down a bit the 1-hour time frame and see what the 1 hour has. So in this case scenario, price has pushed us into this area. Do you have a demand level? If you watch carefully, there is a demand level in this, but I'm not going to try to confuse you yet. So let's look at this here and this over here, right? So then from there we can see just a nice rejection through that level there. We're going to see it on a lower time frame. Then come over here, we can still see the same thing. We're seeing that area being rejected. So we want to track the origin of this. So you can see that now there are two, one took out the other, and then now we have this being around there. So that's just basically the art of refinement. And then I'm looking for the lower time frame bearish move. So if I look at what's happening from here, I can now start picking up some bit of price action. We can look at this area here above. So of course, above this, we can push up, fill up these areas, and look for those bulls around there. And look for those bulls around those areas there. Then of course, when you come in and look at the breakout to the downside, what do you expect? Do you have any areas below this? Yes, I have an area below this, a bigger area that I want price to get to, because I'm not seeing a lot of things up to 30-minute time frame. So I know those areas are just reaction levels. So this will be my ultimate bearish zone, bullish zone actually. So in my ultimate zone to look for bulls. So I can expect to push it all the way to that area. I think we saw USD JPY with a similar perspective. We saw USD JPY with a similar perspective. When it's that push down, oh, it already broke below actually. So you can see that perspective very, very similar. So in this case scenario, I'm going to look for the same exact thing. Now that you have a closure below this low, you can expect a pushback into this area, and then price continues taking us lower rate. So it's price pushing us back into this, and then taking us to this level here. Worst case scenario, we break above this. Then I think if we break above that, we are definitely going to go in for the gap down. So definitely going for the gap down around here with the supply level right over there. That's what I'll be looking out for. So that's basically what I'm looking at on GBP JPY. I can see the momentum. It's kind of like a reaction, but as you mind, okay. So that's basically what you should want to look out for. All right, so that's as far as GBP JPY is concerned. So we can move on to the next and see what perspective we have. So someone here says some AMD and Nvidia insights. So with AMD and Nvidia, we still expect them. I'll start with Nvidia particularly, right? Ever since the deal they did with Oracle, we expect them to just remain so bullish. That's basically one of the first perspectives we're going to have. The thing we're going to look at is that AI adoption, right? AI adoption is actually being more, AI is being embraced even more, right? If you can take a look at what Elon Musk spoke about AI, how he said that AI will be more intelligent than human beings by the end of the year, that just shows you how fast the human beings are adapting to AI. And that basically means Nvidia, companies like Nvidia are going to still be very, very strong. And of course, the fact that they partnered with things like with a company like Oracle, or which cloud computing is one of the biggest necessities for all major companies and conglomerates, basically gives it more reason to just be to the upside. So we expect Nvidia to be bullish from now. I don't know if I can pick up a chart of it and we just look at the chart of it as well. But that's from the macro perspective. As I look at it particularly, that's what I'm looking at as far as Nvidia is concerned. I expect it to be bullish, basically from Elon Musk's comments and how he spoke about the future and AI last week on Wednesday, and also looking at what is being put into use, right? We also do know that when it comes to things like chips, there will no longer be a problem for such companies and that are going to run these kind of softwares or these kind of mainframes, because you will notice that you remember that America did sign the deal late last year with the Taiwan Semiconductors company. So the chips will be available for the companies going to run heavy chips like Nvidia and AMD. So when you look at the price here, it's still stalling. My personal projection would be a price of around 200 plus. Usually around 240 would be my target, because last time we did see highs of about 212. But I would still think price will push above that, right? I think price push above that, and you can see it has been picking up. We had a high formed, higher low, expect to form a new higher high when it comes to Nvidia as well, right? So with AMD it's a bit tricky. I don't really think, okay, it's also bullish, right? It's also bullish. I will be bullish on it, but on a long run, right? Because with it, I would expect to see its major growth coming when we see a lot of these companies building data centers in the US, because then they will have to support the US more, right? So the country has been a bullish run as well. I expect it to be bullish as well, though not as much as Nvidia. I believe Nvidia is going to pick up so much, and just once again, of course, give us some more shockers. But we're looking at this resistance on AMD, and we can definitely see a breakout and a push to the upside. In case of a correction move, we can definitely see this come down all the way into these areas here. So you have to watch the space, see what Trump speaks about tomorrow, because speaking about the American economy, what companies they sign deals with, and then what other business coming into the US, sort of look out for as far as Nvidia and AMD. But that's my perspective on those two. Other than that, so how do you use a FIB tool? In the interest of time, Lina, I believe I'll get to answer that in depth or more practically tomorrow during the webinar. So guys, don't forget to sign up for it. The links in the description. Other than that, I'd like to wish you guys a beautiful week, an amazing day, a blessed day. And yeah, we'll meet on the next one. Don't forget to share with your peers, share with your friends, invite as many people as you can for tomorrow's webinar. It will be epic. The link is in the description. Yeah, so until then, cheers.